Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that altcoin pump as well as the sideways action on the BTC chart. Guys, if we do just jump straight over to the chart, you can see, of course, this basically candle structure here, which is starting to look pretty bullish and reminiscent of a inverted head and shoulders. Now, guys, this is the pattern that I was mentioning in the last episode, and I know a lot of traders, especially the longer term professional traders, they really like to poo-poo these patterns, but on BTC it works really well. So we are going to monitor this very tightly. But as you can see, we have not yet conquered the neckline. And so while we did have a bit of a pullback to the shoulder structure and we are pushing back up, we can't really celebrate this as having been completed. We do need to flip this area, and then after flipping it, solidly holding it or putting in some type of indication that it's holding, and then perhaps we could get that measured move out of it. Now, another way to look at this price action, because ultimately price action is king, is to look at the channel that we're in. And what you can notice, of course, is that we had previously been rejected from this area, rejected from this area. We had some type of fake out to the upside and then a push back down. We had a fake out to the downside and then a push back up. And ultimately, we did flip this area, which had previously been resistance on this diagonal. And then we actually proved that we could hold it again. And that is kind of building this diagonal cup and handle structure. It's building that diagonal head and shoulders structure there, that inverted, head and shoulders there. And of course, the neckline here would be on this diagonal. So if you wanted to front run the move, really the price that I'm looking at is somewhere around 27,000, let's call it 250. But if you want to be very secure in that move, then we're looking approximately 27,700, and you're going to have flipped this area over here as well. And that would be a very strong sign of continuation to the upside, perhaps putting in that measured move, which if we just conservatively take this lower neckline down here, would suggest a price of approximately, let's go with 28,860, and then with some wiggle room to that $29,000 area. And holding up there, you could potentially say that the bull market is back on. Now, let me just go ahead and delete some of these messy drawings here. And just keep this structure in your mind, because if we do flip this area, we will essentially have committed ourselves to a breakout, okay? A real breakout of a real, channel here. And that's going to be a big deal. Now you can see that we did have this diagonal if we do just want to put a little bit of a wedge pattern on here. And we already got that retest on it, okay? And it was a very bullish one because it didn't even tap the breakout line. It really just took off on the mid channel of that channel that we were just discussing. So, very bullish overall. Now, could we later come back down and grab this liquidity that everyone's looking at 25,500? Yeah, this move could fail to hold up here, and maybe we come back down, maybe even put in some structure and then try again. Or, we could get rejected up here, once, twice, even three times, and maybe get sent back to the bottom of the channel. Maybe we do a little bit of a fake out down here or build in some structure, and that would also take out this liquidity, and then maybe try again. So there's your bearish perspective as well as the bullish perspective. And what we don't want to be is biased in this market. We do want to take the opportunities that are in front of us. And you can see that on a daily basis, we are above that Bollinger Band midline. So we just don't want to have too bearish of an orientation right here. But at the same time, we are at resistance, right? This was the area over here to buy. This is not the area to buy. So if you are a late long, you are somebody who can easily get liquidated in this market. And so you probably want to wait until we flip this area up here and prove it prove that we can hold it before initiating any new longs. And you want to be very conservative in this area where we are going to start facing a lot of resistance up there. And that would just be my non-financial advice to you guys. If we do have a chance to have a pullback here, I would say that we had re-entered that buy area, and it may be why market makers just aren't giving us another opportunity down here. You don't always get two chances, guys. So if you didn't take the risk here, then the market just may not give you that chance back. So we do have to watch to see, maybe if the Congress doesn't pass a budget, maybe the stock market pulls down other assets with it, and maybe we do get that entry. But maybe this market just completely ignores what Congress is going to do and just believes they're going to pass a budget eventually anyway, and just continue on with unlimited spending. Okay, there you guys have the two patterns that I am looking at. One just kind of a very typical pattern, and the other one based on price action and channel theory there. If we do go over to our new daily pool, which did start this afternoon and should continue through Sunday, you can see that we are just sitting on top of that hold momentum level, and as long as we're there, again, we just can't be bearish. We are sitting on top of the pool, above the pivot, above the volatility pivot, and above the momentum pool. So momentum's in our favor and volatility is in our favor to the upside, and that would give us a target of the bullish control zone at 27,440, which, if I do remind you of our channel, does suggest that we could start pushing into that area, and we would be looking forward to that as long as we have the hold momentum level at 26,961 underneath us. Now, should something wobble the day, like the Congress, not passing what they need to pass, and we dip back into the pool, then we'd be looking towards the bottom of the pool here at 26,646, breaking below that. Then we would be looking at the neutral point of control at 26,594, where underneath that, bears start to have the advantage. And I would really only be looking to short the intensity of this move to the downside if we do break the big alpha energy level and the volatility pivot approximately at 26,362, in which case it would be a good opportunity to potentially short, where we will have broken all of that nice structure and maybe look towards that liquidity at 25,500, which again would be at the bottom end of this range here. Let's see if we do take a look at our weekly levels, because of course we do have a weekly closure coming up tomorrow. You can see that in the past, these weekly charts have been very good to us, where, even though we did, have plenty of trades to the upside and the downside and to the upside and then to the downside on these pools, when we did get that downside trade set up, we didn't get stopped out on it. And that was just an astounding 15% trade there. So if you guys did take that, short off of that momentum pool on the weekly chart, then you guys are absolutely killing it. And then, of course, we did find some type of a bottom around that alpha energy level, and there we did just hold above that. So we never really intensified below it, a little bit of a fake out, just a deviation, but we really did hold above that alpha energy level. And so the intensity of the move never got so extreme that we had a total breakdown in the charts, and that's what that alpha energy level represents. Of course, I wouldn't have known when we were up here that we would come down and tag it, but we nearly tagged it perfectly, and we have been holding that alpha energy level, just showing that, bulls are still trying. And of course, we can fast forward to our next major pool on the weekly. Of course, that was while we were having the fake out to the downside. We did end up pushing up, and so far we haven't filled this pool yet. So if we did push up into that higher $27,000 area, then we would finally have fulfilled this pool. Of course, that week did end up passing, and we did end up going to a 2-week basis, because I do believe this market is operating on the 2-week basis, but I do like to look at the week in between. And so the new weekly chart that we have going for us here is a little bit thinner, and you can see that we did actually fill it in one swift move. So this pool was completely filled already, and now we're just looking to see, can we hold above that neutral point of control at 26,969, and on a weekly basis this is going to be closing in 19.5 hours. And should we hold above the neutral point of control, then bulls will have a slight advantage, but where we're going to be more secure is above that Bollinger Band midline, approximately 27,000, let's just say 200. And of course, the pool, which I operate by, which is a bit more mathematical, is at 27,310 to 27,350 if you want to go by the MACD traders, and that would flip the MACD bullish on the weekly and make a lot of MACD traders really happy, as well as the RSI traders. Guys, if we do end up losing that neutral point of control, then we could be talking about coming all the way back down, to the $26,250 level. But really, it's better just to wait for a weekly update on that, because I don't think that would be getting filled all at once. But and the shape of this pool might change into the new week. We'll have to see where we close exactly on Sunday evening. But for now, you can just keep that in your mind that we are just tagging that Bollinger Band midline on the weekly. And so if we did get a rejection, it would probably be right here at the top of the pool, right at the Bollinger Band midline, and right at that neutral point of control, where on a weekly basis, if we got rejected by all three of those, basically in the same spot, that would be a bearish retest of that Bollinger Band midline that we had broken down under. So just to be very aware that this thing could still, no matter how bullish we look on the day, this thing could still on a weekly basis just be tagging the Bollinger Band midline, and then maybe we end up coming down here and making a W pattern before trying higher, or maybe we actually fall and test that bearish control zone somewhere around 23,688 on a weekly basis. Now, not only is the week closing tomorrow, but we also had a monthly closure. So let's just go ahead and see where we were in September. And in September, I actually was looking to fill this pool here, and it looks like we did in fact fill it completely. Let me just turn off the pool here, and you can see that wick right there did push up. And so this candle here, it did fill the pool that we had at the beginning of the month. Now, we would have only had this red candle when this pool was created. And so that blue candle that you see here, and also our current push up that might just continue to push up to just fill this with candle bodies, or maybe even come up to the neutral point of control as high as that 28,000, which I did mention multiple times we need to conquer in order for the bull market to be back on. This thing could just pop up to 28,000, get rejected there, and then come back down. And what would the shape of that next month look like if we were to throw a pool on it? Well, this is extremely narrow. So this suggests that our volatility is building up. And if we do want to have some type of volatility target areas, well, flipping this bullish and conquering the neutral point of control on a monthly basis, which is no small feat, could show us that we have the potential to move all the way up to the bullish control zone at $43,000 and perhaps some change up there, which of course it could cool down over time. But losing it, we could drop all the way down to that $24,000 to $22,000 level, where we do have not only the big alpha energy level, but we also have the monthly pivot as well as the 3-month volatility pivot based upon October's numbers now that we're entering a new month. So this pool is very thin. It only occupies a space of 27,173 to 26,961, which, whichever side we're on is going to be our bias more or less. So we'd probably, rather than rely on the pool for this month, we'd probably rather rely on that neutral point of control at 27,849. And then considering everything on the weekly, let's just throw our bias above 28,000. 28,000 looks a lot more secure for this market to be back on. And even that could be just a liquidity grab of this space right here. One thing I do want to make you aware of is that we do have this liquidity down here around 23,000 on the quarterly basis. And usually what we've seen in previous markets is a quarterly backfill. So if we do get a quarterly backfill, it doesn't have to be in October. October could be, it could still be up, okay? It could still be an up month. But, you know, as we enter towards the end of the year, we could end up eventually putting in a quarterly backfill that does fall down to that $23,000 area, which, lo and behold, is right between our monthly volatility pivot and our 3-month volatility pivot. And so it would suggest that that is a natural target. Now, I'm not so bearish that I'm looking any lower than that. I would expect us to kind of find our footing there, sort of like how we found it on the weekly with that big alpha energy line. But should we lose it, then yeah, we would be looking towards that $13,000 area, perhaps with some type of interlude down at our lows in that $18,000 to $15,000 range before then. But otherwise, this is looking fairly bullish, and it looks like we're, gathering our support in this area. So the longer that we just kind of fill out, a low in this area, the more likely it is just to being a higher low, and the likelier it is that we're going to chase that 40s area rather than the teens that the perma bears would like to look forward to. Now, I know that's a lot of information, but again, we do not only just have a daily close, but we also have the weekly close. We have the Congress budget issue going, in the air still, and we have the monthly close, which just closed. And of course, we also have a quarterly consideration as the quarter is closing. And, we're just going to have October, November, December, and that's going to be the end of the year. So we have to be aware of these key levels. All right, guys, that's your alpha for the day. Stay safe and happy trading.